Welcome, everyone. I'm John Ryan of SportsMemo.com, and this is the financial and sports betting show for Monday, June the 13th, 2022. And given the current condition and um, volatility in the marketplace today, I thought it very compelling to do a quick hitting show here. I'm going to be talking to you for about 5 to 7 minutes. My good friend and pal Steve Merril was unavailable for this special edition of the show, but I hope that I can cover all the bases here. We definitely have the example of why not to catch the falling knife. He and I talked last Wednesday about the potential breakdown through the 20. Basically, it was like the $28,000 support level in Bitcoin, and sure enough, it has. Adding to the concern now are the rumors of large, and I mean large, several $100 million worth of margin calls. And what a margin call is simply the firms that had put up money, they leveraged everything they could based on that deposit with a broker. And now the prices come down to a point where they have to put up more capital, and it's come down so fast today, being down roughly $5,700 in Bitcoin, that the margin call now is being requested for a lot more than just a few bucks. We'll have to see how that plays out, but that actually is a big concern, in my opinion, and it could lead to more liquidation of Bitcoin. And, go back to the pandemic. We saw crude oil futures trade negative value, which means that you could have bought a contract and gotten paid for it. It involves substantial risk, of course, but don't think that these things can't happen. And the market here, as a chart I'm going to show you right now, is Bitcoin, and hopefully you can see it here. Next time I'll use the lighter version. I'm in dark mode, obviously, but the bell curve that's on its side there on the right-hand part of the screen is the Stoudemire profile, and it's something I've used for more years than I care to admit, probably all 40 years of my trading experience. But this is an example where we're now making an extension below that support level, which was basically at 28,000. And you can see the Sunday night action took us, much lower than where we are now. Whether that low holds or not, I don't know. I think it is going to be predicated on the fact that we have to wait and see whether these margin calls are real and how big they are. But you can see in this area here, the volume is enormous today. It's essentially going to be at least the second highest. Here's a big one over here as well. That was on an up day when we started the advance for the second run at 69,000 from hitting 25 basically. But now we're breaking down below this. I'm going to change the bar chart from a daily bar chart, meaning that every single bar on that chart right in front of you is a day's action. If it's green, it means the close was higher than the opening level. If it's red, that means the close was lower than the opening. And then, of course, you have the wicks above and below those two situations that make it green or red. You can see these are enormous red candles. And even today, it looks small compared to the previous. But believe me, that's a major move. Or, right now at 22, the low was 22,490. And we're not much above that, folks. I mean, I would be very surprised if we don't make a run here in the afternoon to fresh lows, possibly closing on the low. There's no signs to me that we're going to have a knee-jerk short covering rally here, because the news is real. I mean, the potential for major margin calls here is real in the Bitcoin futures and in Bitcoin itself. And there's no way to hedge yourself in the physical commodity. Well, it's not physical at all. Using a word that I used to use as a chief currency strategist back in the day, but there's no way you can short the actual Bitcoin. The only way you can short it is by using these futures. And some of these firms are big enough that I'm sure they have already established hedges in the contract, but there's probably more to come. Whether this market right now, in my humble opinion, does have a short covering squeeze between now at roughly 1:45 Eastern Standard Time to the close, I don't know. My gut and experience of all those 40 years is telling me that we're probably going to see additional downside pressure. And the reason for that is we're going to switch over to a weekly bar chart now. Every bar here on this chart is going to be a week, and it's actually extends 3 years. So you can see the pandemic low here, 42.10. We got a long way to go till that. And this is a incorrect data here for the bar. That's not correct, and it's not correct on the daily either. Now that I've seen this on a weekly, but we're right here now, and you can see that on the profile, this area right in here is now our new range. So the bottom end of this range is basically 10,470, and upside here, which we're not going to be anytime soon, 49,000. It's more likely to be right in here, essentially right in this area here. You can see the cursor between 27 and 28,000, which was once support, is now resistance. And I do think over time we're going to get a slow or maybe even a fast move down into this $12,000, $13,000, $14,000 level. I don't know if it gets down to 10,470, because this is going to be around for many, many years to come, if not decades to come. It's not a thing that's going to go away anytime soon. But I do think the closer we get to this 11,000, as Steve, Merril, and myself mentioned last Wednesday, we're going to get a great buying opportunity in Bitcoin, at least to consider. Whether we actually do it, it's going to depend on all the news that's going to be coming out. Much like we get news in the sports betting markets, with umpire changes, we get player injury reports. Sentiment, market sentiment is so huge right now. And on the downside, Bitcoin right now is the lowest sentiment. In other words, it's least liked in the history of the contract on my data. So what that is a contrarian indicator. So as we continue to liquidate positions here this week and possibly next week, that indicator alone is going to suggest that we're very close to a pretty solid buying opportunity. And honestly, it could be right here, but we don't have enough data, and there's no reason to step in front of the wave here and try to be a hero and buy the contract. And again, I'm not a certified financial planner. I'm just a guy that had a bit of a Wall Street career, and now combines Wall Street with the legalization of sports betting, and the similarities are very much. There's a lot of similarities between the two. I'm not saying that investing is gambling. I'm not saying that sports betting is gambling, but sports investing and investing are very similar. Sentiment. We have games where 80% of the bets are made on a team, 20% on the other team. Somehow everybody in the world thought that one team was going to win. The other team wins. Not all the time, but it is a contrarian indicator. The same thing applies here to the markets, and we're a sentiment reading of 18% bullish enthusiasm for Bitcoin, and that is the lowest I have seen since the inception of the Chicago Mercantile Exchange futures contract. So I wanted to mention that. Let's move over to the S&P 500, which is also making a lot of people nervous, and the whole key to nervousness is if you're in your 20s, 30s, 40s, even, in my opinion, and again, I'm not offering any investment advice at all, but time and experience have shown that these dips, if you ride them out, you end up okay. It's going through the valley of these dips that makes it very difficult to withstand emotionally, and it really can't have emotion in sports betting. You can't have emotion in trading, believe me. But let's move over here to the S&P 500 quickly. And you can see here, again, we're making an extension now. We're filling in more and more to the low. This is obviously new lows today in the futures contract at 37.50. We are right now substantially off of that low, currently trading at 37.78. That's roughly 30 points off of the low, about 240 Dow points equivalent. But again, look at the severity of this decline. The market was trying to form a base here and then get the momentum to get back up into this area. But as Steve said on Wednesday, and I agreed 100% with him, what's the sense of buying in here when there's a ceiling only a few, less than 5% away? The upside was quite limited. It's much better to have waited and then see, oh, gee, the market's up in here now, and the bull trend is in force and it's strong. that's different. You don't always have to buy the absolute low or sell the absolute high. You can get, even if you get 50% of what's in between, you're going to be successful doing that. You don't have to pick the absolute low, and that's what I'm encouraging here from my experience. And again, my opinion is only my opinion. Is that you don't just think, oh, this is the buying opportunity of a lifetime. Well, after it bottoms and forms a bottom and starts to trend up, then maybe it'll be a tremendous buying opportunity. And there are some smart minds out there that I've heard on various podcasts I have a tremendous amount of respect for, and they are pointing towards a situation like 1981, where we had the aftermath of Jimmy Carter's price freezes, which was at the time a great idea. Again, my opinion, it didn't work out. It didn't perform as they had hoped. And nobody does things to hurt our U.S. economy or the way we live. That's not the point. The point is we're coming out of a very, very severe Fed tightening situation. Paul Volcker was the Federal Reserve chief back then. He jacked interest rates up to 22%. So we're complaining about rates going up 75 basis points, possibly the next Fed meeting. So we're light years from that. However, the correction in technology right now is so severe that it is setting up the potential for a great situation in the next coming weeks. And maybe it'll be September when the actual chart gets into a position where we can say accurately, yeah, based on this, history tells us that now is the time. And that could be several hundred points higher in the S&P 500. The point is that you don't stand in the way of this movement right now, which is really starting to gain some momentum here to the downside again. We just lost like 50 points in a matter of minutes. It's very severe today. This is big boy trading today, and you really should just stay out of the way. Even if you're a big boy, you should stay out of the way of it, because it's very difficult to flip contracts in and out successfully. But anyway, the volume is already at the highest levels from several days ago. Let's pull up a weekly chart of this, which is right here. And this is even more. See, the trend has already been negative. It's, an A, B, C correction here based on the Elliott wave. And this could go 5 waves. And that's what the Elliott wave is all about. You can Google that. R.N. Elliott was the guy who discovered it, sitting on the beach watching waves in the ocean. I kid you not, but it works. And it's a very effective way. It's another tool that we use to identify, where we are with these charts. But you can see here, that's an engulfing candle right there. And that is always a red flag at the top of a bull market like this. Usually leads to a correction. You have a doji here as well, where the open and the close were exactly the same. And that too, with that, those two combined become pretty powerful as bearish indicators. And lo and behold, you get this. And there's another engulfing candle. There's another one there. And we have one up day, which was short covering, obviously, now that we're down here. So the next area of support would be right in this area here at 33.33. And that has to be good luck if it's straight threes like that. I like it already. But that's the top end of that bar right here in terms of volume. So the lines going left to right are measuring the volume. So our high volume price here is 44.15. That would be your ultimate resistance level. The profile shows 43.74 on the upside, but the downside here is still substantial based on this one indicator alone. This is just one simple thing, just like a simple handicapping strategy in sports. You can't rely on just one to be successful. You have to have a whole toolbox of them, and then know the tools so well that you know when to apply them. That's the whole key to this. And it just doesn't mean anybody's smarter than anybody else. It takes experience, intuition. And honestly, in sports betting, I use the term, you getting your face ripped off. You thought you had a pretty good play, or you're going to have a pretty good week going. And it just happens. It doesn't mean that you're less fortunate or less smart than the other guys and gals out there doing the same thing. It just means that happened. It happens to everybody. It happens in pro sports. It happens in high school sports. The best of the best in any level of sports or trading go through horrible times. And, those times, you can use it to benefit. We always talk about inspiration from other people that have these wonderful quotes, and it's true. You wouldn't know the good times and appreciate them if you didn't have the bad times. You wouldn't know a sunny day if you didn't have the rain and the hurricane type of stuff. You wouldn't know the difference. So I'm just pointing this out, and it's Monday. Mondays historically are generally the worst day of the week. Tuesday is the counter trend day. So tomorrow is very important. No matter where we close today on the downside, if we have a counter trend Tuesday rally tomorrow, it's probably going to be met with some pretty aggressive institutional selling in the afternoon. That's usually the pattern. Then Wednesday, fresh lows, and then we have to see how the pattern goes. But one pattern I can tell you, and you can check it out yourself, is if you're down big on a Friday and you close near the lows, and I mean big, like we were this past Friday, you get follow through on Monday, unless there's incredible change in the news that caused the sell off on Friday. And that's just a continuation of the trend. And it's exactly what happened with Bitcoin. One last thing here, we always look at the crude oil markets too. Crude oil here is, it's trading up near the highs. I do think that we're forming a top here. I really do believe that, because the Fed tightening is going to slow things down no matter how we like it. It's going to put a lid on inflation, and that's the key point. The purpose of the Fed is to provide price stability. It's not to fight inflation. It's not to make all of us millionaires because they have interest rates low. Mortgages are 5% right now. If you look historically over the last 50 years, the average rate has been 8%. So you put it in perspective like that, it's less scary, I think. It's like, oh, okay, well, we're still 5% is still quite good. And 5% 10 years ago would have been considered stimulative. Now went way lower than that, and now we're coming back up through. So psychologically, when you come back up through that level that once seemed so low and cheap, now seems expensive as you know what, and we're still at 5%. The number hasn't changed. The rate of interest that you pay on a mortgage hasn't changed, but our mentality and our psychology has changed. That, oh my goodness, mortgages are at 5%. This is horrible. On the way down, it was like, oh, this is tremendous. So I'm just pointing that out. And this is why you have the same feeling when the market goes down 800 points or 1,600 in 2 days, 3 days, whatever it is. Anything that gets, headline news, and it is scary because it's our retirements, and, we're trying to do the best we can and be good custodians of our funds and our investment dollars. So, that's what it's all about. And if you remove that emotion from it and look at what the picture is telling you, like this chart is telling you a story. And if you don't include your story in what the story really is, or what you hope it to be, and you really look at it objectively, that is the story and that's how the market is, you're going to learn an awful lot from that picture. You go in an art museum and you look at the pictures and you take in a lot, right? It's your interpretation of it. Same thing here. And there's really no difference. It's just a different form of artwork. I did notice that it looked like heating oil was putting in a possible reversal here. Not really, not right now. But again, these are, wedges forming here. And I would lend to seeing a top, but I would wait until these moving averages turn over and they get level. And that would be another factor where you could say, yeah, the market looks heavy, but right now it doesn't look all that heavy. Let's go back to, one stock I wanted to mention is Endeavor, which now there it is. I think it's ED. Is it EDV? No, it's EDR. EDR. And that's the, for lack of a better word, the fighting company. So Endeavor Group Holdings is a sports company, and I follow all the sports stocks, obviously. Like Warren Buffett said, you invest what you like. You know, if you like McDonald's, you buy McDonald's stock. If you like Walmart, you buy Walmart, etc. I like the sports stocks, and places like MGM and Weston and all those good places. It makes sense, right? Because you're on top of it every day, and you kind of know the industry. But here's a doji on Endeavor at 1742 was the low. That is a pretty good indicator. I don't like that we're doing this though, but the fact that we're not making a new low, the S&P 500 is making a new low, the Nasdaq's making a new low of these recent trends, but this is bullish divergence here, in my opinion. We're currently at a price of what, 20? 20.47. So we have a low of 1742. So basically between 1950 and here, I think is, again, my opinion. I'm no expert, but I, kind of have done well with this. So I'm just passing it on. But I think between here and 1950 is going to be a pretty good buy for Endeavor. And then we rally back up to the 27 level here, the top of the bell curve from the style monitor profile. And then potentially all the way back up to 31. But that's going to take time. It doesn't happen overnight. It could be, November of this year, end of the year is where I would think if this is a pattern that is going to end up at 31 and potentially above, well, then it's going to take time. It's not going to happen in a week. But this is a company that I like the balance sheet. And yes, they have some debt, but it's related to promotion and advertising and branding. But this is potentially a company that's going to be a cash cow for a long, long time. Their events are spectacular. The views and everything else are up through the roof, and they're growing. It's just that they're leveraging the assets, and that requires money, creates expenses, and that's why it's not at $50 a share, because you have to build things, you have to construct them, and then the investment pays off. And I think it will pay off with Endeavor. So I just throw that out there. And that is a weekly bar chart, by the way. And a daily, it looks like this. So this is bullish divergence. Again, S&P 500 making fresh lows of the recent trend. And this stock made its low, but now it is really kind of stabilizing. So this is more of a situation, I think, that warrants it. And of course, if you go through 1742, you can put a stop loss in, get out, reassess the pattern, reassess the picture, and then get back in. And nobody says you have to stay in and be married to a stock. You don't have to do that. And that's another important thing I've learned over the years, that, scaling into a position is one thing, but then, thinking that, oh, well, 6 months from now, it'll be back up. Well, you better have some really good reasons why it's going to go back up in your mind, and that the story behind it is bullish, so that's true. If it's just hope, that's not a good thing. That hope may just turn into further losses, unfortunately. And that's the way of the world, and that's the way it works. So, know the underlying story of the company. If the story still is good 6 months from now, as it was 6 months previous to that point, then, you got something. So anyway, that is that. Let's take one more look at Bitcoin here and see how it's faring. At least things are stable as I'm talking during the show. We're now at, where are we here? We're at 23. 1 second here. We're at 23,125. So we lost about 500 during this show. But again, let the market tell you what the picture is. This picture, this chart right in front of us is giving us a wealth of information. And it is definitely negative. Right now, it's negative. And again, my humble opinion, to stand in front of this and try to buy, thinking that this is a valuable situation, I think there's going to be better opportunities with a price structure on the chart that's more conducive to a major bounce. We're not there yet, in my opinion, and that's all I'm going to say about that. So, meant to go about 7 minutes here, but I didn't. But nevertheless, I have a passion for this, and I hope you learned something from it. I'll be back tomorrow, more than likely, with another quick hitting segment of the financial and sports betting show. Remember what I said about sentiment? We're extraordinarily low right now on sentiment. And just like in the sports betting markets, you want to become a buyer of that team that everybody is casting to the side, that has no chance to win. We saw that in game 1 of the NBA Finals when the world was betting Golden State. And who won that game? Boston. Nobody gave Boston a chance. And after all, the history told us that the first game of an NBA Final, the home team was 17-2. The last 19 playoff seasons. Now it's 17-3. But when the consensus readings like that, for whatever reason in the world it happens, I don't know, but you want to become contrarian at that point. And if you're not sold on the other side of the sports betting market, then you just sit and watch the game. Again, like nobody's forcing you to buy Bitcoin right now. And there'll be better days ahead to get it. Like I said so many times now, at a better structure on the charts and much more confidence that it is actually going to go up. A chart like this it would just take monumental news to have it rotate back up suddenly, as if this day wasn't warranted by enough real news of margin call potentials and all that good stuff. So I'll end here, and make sure you check us out in an hour on the Major League Baseball show, the Daily Double on Sports Memo TV. We already did the NBA Triple Double with Ronald Kabang and myself. That's already up there on the channel. Make sure you subscribe and ring the bell. I greatly appreciate it. So until tomorrow, we'll wish you the best of luck and especially health and happiness, given this COVID stuff that's going crazy now in Vegas, affecting the World Series of Poker. There's a lot going on. So we look forward to seeing you tomorrow. Make sure you get over to Sports Memo and WagerTalk.com and pick up, your best of the best sports betting information you can possibly get any place in the world. In my opinion, it's worth it, and it doesn't cost you an arm and a leg to get involved. Thanks for watching the show, and we'll see you tomorrow.